Yo, hello. It is the 23rd of February, and you are getting a trade recap. So let's go. Basically, I'm gonna move in sync with what my journal was. So let's have a look at Forest Factory. Today we had no severe news come out, right? Nothing of importance, nothing of importance. So quite a chill day today, okay? On the daily, we can see that yesterday's candle right here, okay, the high. This point and then keep you broke above. Okay, we broke above, we do it on both assets. Okay, now we are still within that internal liquidity range. What do I mean by that? This gap, okay, this bearish gap, okay. And obviously, so it's two contradicting things. We have the bearish gap, and then we have this close above the candle. I think this is obviously way more important than the close above the candle. So continuing on, yeah, we're looking at the range as well. This is a lot. The yellow lines represent last week's range. So we have the low from last week's range and the high from last week's range. We were closer to the high. However, given the bearish gap, it was quite unlikely. This would be protected if anything, it would move lower. Okay, this would be the intermediate high. Okay. Okay. Now let's go on the 4-hour. On the 4-hour, what do we see? I actually just skip through so we can see where I was when I was looking at price. So it's kind of it. Okay. So here, what do we have? You can see that we're disrespecting bullish gap. So this is a bullish gap. We're disrespecting it, right? We displace lower and we have a bearish gap. And in this case, we seem to be partly respecting it, okay, at the time. Okay. We also seem a bit of a range on the 4-hour form. We see how we have a small range here. Okay. Given that we reached internal liquidity last week, it could be reasonable to target these high time frame swing lows, right? Here. Bang, bang, and possibly even that. Okay, let's look at the 1-hour. On the 1-hour, we can see that we have the same thing of the bullish gaps. For example, here, all these bullish gaps marked out, both the assets are being disrespected, right? We're displacing through. Okay. Now, pre-market analysis. So let's just have a look at what happens. So 12 a.m., right? From midnight, we move higher. Okay. In the bearish scenario, we want price to move higher before it moves lower. Okay. Which is kind of in line. Okay. Now, let's look at what London does. So London here, what does it do? We see it rallies on higher and runs into a key level, right? Running into the higher time frame bearish gap, which is here. So I think that's the 4-hour. Yep. So we run into the 4-hour one during London. Okay. Oh no, spoiler. Spoiler. No spoilers. Okay. So London runs in. Okay. However, it did not seem to take any form of liquidity, right? It's just a small rally, right? Small pump. We run into this gap, but there's no key level or there's no liquidity that gets swept. For example, no Asia lows get taken out or something like that of that sort. Okay, so I was keeping my eyes peeled, right? We also had an opening gap that formed here on Sunday opening. Okay, Monday opening, ready? And yeah, okay, so let's continue on a little bit on the hourly. We can see that we actually obviously displaced through both of them. Okay, we displaced through this one on ES, right? So there are a lot of bullish hourly gaps on both assets that price can either be draws to or to areas where we can displace through, right? So this would be a draw in the form of a displacement through it, right, to target lows, or a manipulation to respect it and move on higher, okay? I'm having a conditional bias depending on which side of London we manipulate first, okay? So we have these lows and we have these highs, right, of London, as well as these Asia lows, okay? If it's the lows, obviously we're going to target, we could possibly see a distribution high into the volume imbalance, another PD arrays, such as these highs, the weekly highs. If the highs get taken, we can distribute lower into these hourly bullish gaps and even Asia lows. Okay, so let's actually go into the 15-minute and let's see what happens at open. Okay, so we are 8 o'clock. 1, 2, 3. 1, 2, 3. Right, let's see what New York does. So let me actually just select this bar. Let's go here. My 5-minute. Now, what did we see happen? I actually want to go on the 1 minute so then it's a little bit clearer in terms of what happened. So here we have the London highs. Here we have resting highs as well. Okay. Now New York M opens. Okay. And let's see what price does. Boom. Right, we have massive just a spike up. Okay. Then we have another move down, another move up, move down, another move down. Okay. So at this point here, we can see, let's actually zoom back out on ES. This candle, right? This 930 candle, what do? We take out this high. We don't take out this high. Why is that the case? Why didn't I wait for that to happen? Well, let me tell you. First of all, we have a change to state delivery right here. On top of that, we sweep out London highs, which is what I was aiming for. We almost reach into the volume imbalance. ES runs through the volume imbalance, takes out any pending orders there, and takes out this high. This high is not needed because the orders are within a range. Okay, they're all within a range, and if they get tapped, then that's fine. Don't forget, we also have this. I think this is a massive 4-hour gap on ES. It's an hourly gap. Yeah, we have a massive hourly gap, right? Which price reaches into again, and we saw last time it reached into it, we had a massive decline. Price reached into it, because yeah, massive decline. Okay. So, why is it spawning it every fucking time? Okay. So, not only that, since the high got swept here, okay, so let's actually just put up the 1 minute candle. Let's just see, I want to see price actually run in and take it out. There we go. So price actually runs in and takes it out on the 5 minute. What happens on NQ? We don't take out that high. All right, so here we have, pretty sure this is 1605. And this is it this one? Yeah, it was this one. My apologies. 1605, right? We don't sweep it out, so we have an SMT. Okay. Now, at this point, so we get the SMT, and now I'm on the 15 minute for NQ. And what am I looking for? A change in the state delivery. Where's the closest change state delivery? So we have a sweep of this high, and the last up close candle here, that's our change in the state of delivery. Okay. Now, let's look what was I doing after this. All right. Well, if we just actually, right. So price, I'm waiting for this candle to close. Right. And does it close? Right, that's where it closes. Okay, so we have a confirmed change in the state of delivery. Okay. Now, I was getting a bit worried. Why? Because we took out both sides of London, right? We took out this side and this side, right? However, I was quite confident that we were still bearish. Why? Because we reached the hourly gap, we take out this high, and we see this is a nice clean manipulation given London open. Okay. Now, what do we have? This is our 5 minute displacement. So let's actually just, we see this large displacement leg, right? We break swing lows, right? This is a swing low broken. Market structure shift, change in state delivery. The change in state delivery is the more important part when I'm looking at this, okay? Now, when we zoom into the lower time frames, looking for a value gap above this 50% level, okay? Do we have anything, just an individual candle? No, not really. 3 minute, not really as well. We have a little bit, but not too much. 2 minute, still no. 1 minute, perfect candle. We have a perfect candle. Okay. So what does price do? Price rallies in. Okay, and I'm entered on this trade. Okay, I'm now entered on this trade. And now, obviously, I told you guys I changed my account size, so I put it to 10K instead of 50K it was. So now my limits are much smaller, and the amount of contracts I have are also smaller. Okay, so this brings more realism into effect. Okay, so let's see what happens. Price continues lower. We have a small little tap in higher. Price continues lower, lower. Okay, let's just keep going. Let's see what happens. I want to show you guys exactly where I got stopped out. Okay, so I think what happens here is we have a 2 minute gap. Okay, let me just tell you a little bit where my stop loss and my take profit was. So stop loss was at this candle high, right? I did, if price broke through it, then that's completely fine, and the trade is just completely voided. There's no chance that it does not move higher. Here, the take profit was Asia session lows. Okay, Asia session lows. Yeah, let's go back quickly. So we have this bearish gap, right? Now, since I literally had only one contract on this trade, it was a, you know, a point where you're kind of playing with your stop loss and you're trying to reduce as much risk in terms of moving it into the profit region, right? I wasn't actually moving this stop whatsoever. It was always there. But when we had this break, stop loss went to break even, okay? And then at this point, I was kind of reading the market and I was thinking, what's going on? So here we have the 1 minute, a large 1 minute gap, and I was waiting for a low to form, okay? So kind of at this point here, I think I got stopped out right here, if I'm not mistaken. Let's actually just pull up the report so we can actually see it better in this case. So on the 2 minute, we had the gap and I put my stop loss at this intermediate high, okay? At this intermediate high that formed within the 2 minute gap. And what does price do? Price runs through it on the 1 minute. Okay, so if we actually just quickly look back, is that the same candles? I'm pretty sure it is if we look here. And soon enough, let's just wait. Price will take it out very quickly. There we go. Okay, so we get stopped out here in profit, which I'm okay with given that we had one contract to trade with. Now, overall, in terms of this trade, okay, I think I did a really good job at everything, really, in terms of analyzing the market and stuff. So overall, I felt very confident about the market pushing for lower prices, given the way price was reacting around certain confluences. I had a good setup form and waited for execution. I also kind of forgot that it was on the 10K account rather than the 50K, so I thought I messed up my sizing on the trade and whatnot, but no, it was cool. I patiently waited for the manipulation at 9:30 a.m. Bang, it happens, and then we get a retracement and a continuation lower. Okay. NQ retraces into a bearish gap. Sorry, ES. Hold on, what? NQ retraces into a bearish gap whilst ES sneakily rallies and then closes as an yeah, let me actually show you guys this. So here we have the up close candle and then price retraces into the gap, whereas what ES does is, let me actually draw it out for you lot. We can see that this is the sort of range that gets formed and it retraces into the gap on the candle that formed the up close, right? And even then it wasn't in a premium, so people on ES would have missed out on this trade, okay? I was thinking when I got stopped out that actually might be a region where price reaches back into and fills in before continuing lower, before taking out Asian lows, right? So on your KM, what looked like happened is we manipulated taking out external liquidity on ES, okay, very close to the previous week's range high, and then we went to seek internal liquidity, which was what? These hourly bullish gaps, right? Remember, we had loads of those hourly bullish gaps. We displaced through, we had a retracement, takes out external, moves back into internal, okay? Overall, it could be that the day ends bullish. However, in the current present time that I was looking at the market, we were bearish. And obviously now if I skip the replay, we will see that we are still continuing to move to the downside, which I was correct in. Yeah, overall, I'm in the market to catch a small piece of the pie, not the entire thing, right? And obviously since I got stopped out, I was interested to see if maybe price would continue in my favor, and the stop loss was just a bit too tight. So let's just play it out, and let's just wait. There we go. So we actually do get full TP. Unfortunate, but I'm not gonna sit here and cry, right? It's better to get stopped out in scenarios like these where we do see a little bit of rally from an hourly internal liquidity zone before reaching our overall stop loss. Okay. So as a lesson, I could talk about trading stop loss. I could have maybe moved my stop loss to actually this swing high that kind of formed. So we have a very minuscule one. Actually, just quickly move this a little bit. I want to see where the high formed. 36.75, 36.5, right? So there's actually not even a swing high. I would have actually misread that, but hypothetically, even if I put it there, it would have obviously kept us safe. Now, looking on the 5 minute, I actually could have held my stop loss here at break even and then we had a 5-minute gap, and I could have waited for the swing line to form, in which I would have put it there. And then we could have had 40p. But look, I'm not going to sit and dwell and cry on these sort of things. I've got my piece in the market and I'm out. If you're interested, I made, I think, I went to risk 1%. Instead of it being £100, it was 70. So I made 70, which means I got a 1. Okay, if that interests you in any sort of way. We can see we actually target these hourly lows, which is very clean price action. And that's very nice to look at. All these equals get swept. That is clean. All right. Anyway, that's that for the day. Hope you guys learned something from today's trade recap, and I will see you lot tomorrow. Okay. Bye bye.